Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are back with another episode of the Real Estate Investing Club. Today we have Perry Zheng with us. Perry is the founder and CEO of Cash Flow Portal, a real estate syndication software, and an investor himself, having done multiple syndication deals. So I'm super excited to have Perry here. Perry, thank you very much for hopping on the show.
Hi, thanks for having me here.
All right. I told you before we got on here, we always start with stories. We love to hear, how people got from point A to point B. I'm sure you got a good one. So why don't you take us to yours? How'd you get started in real estate?
I got started when I bought my first condo in San Francisco, where I house hack. Then I start buying more single families that are geared towards house hacking. And I moved back to Seattle and I start buying one single family house every 9 months with 5 bedrooms and rent out the other 4. After 4 or 5 of those, I saw the writing on the wall that I can no longer scale with single families. So I start getting into syndication. Now I'm a GP on about 840 units and passively invested more than 2,000 doors. I live in Seattle, and I also created my own software company that helps real estate sponsors or syndicators streamline their operations.
Cool, man. That I love to hear that story, because that is your story, is the story that a lot of people have, and a lot of people who are, they're working their 9 to 5. It's doable. So you started with house hacking. You bought a house in, sounds like San Francisco. So I'm sure you made, that the market there is ridiculous, even more than up here in Seattle. So you started with one down there, and then every 9 months you said you did house hack, you lived in it, you fixed it up, you moved on to the next one. You did that for 5 years. Is that right?
Yeah, basically.
Yeah. And I love that strategy because it's something people can do. I mean, you don't have to be a millionaire to buy your first house and fix it up. If you're working a 9 to 5, that's something you can do. So I like your beginnings. Yeah. How did you make the transition from, you're doing these house hacks, you're living in them, you're flipping them, and then you get to something, you said 860 units you're a GP on. So how'd you make that transition?
Yeah, good question. So my competitive advantage is I have a high income. My competitive disadvantage is that I don't have much time. So when I was doing house hacking, I was having, 4 roommates, and with 4 or 5 properties, I was managing about 20 tenants. But that taught me a lot of valuable lessons on how to manage and how to treat them right and treat them fairly, but being very strict about the rules. I got into multifamily because I know that's the only way to scale. I cannot be buying 4 units every 9 months, right? We joined a mentorship program, my business partner and I, and took us about a month to get our first apartment syndication. It's a 172 unit in Dallas, Texas.
Oh, nice.
The first deal is always the hardest. And then, it's difficult because you need to know the vendors. You need to know how to underwrite, make offers, relationship with brokers, how to raise money, how to know about, PPMs, legal rules and whatnot, and then be able to manage it with the right property management company. And there's a lot of like investor relationships that go on. And so, but it felt like natural. It felt like once you gain skill set in the area, you should get paid for that skill set, right? Because you could use your own money, but if you have so much knowledge of it, and it takes years to accumulate that knowledge, that's what real estate syndication basically is that you get paid for your knowledge and your skill set, and your fiduciary duty that you do right by the investors.
Yep. I love it. Syndication is a great way to scale. If like I was just telling you before we got on the show, I just bought 3 self-storage last month and now I am broke. I'm broke in the terms of that I put all my money in investing. So, I've been looking at syndications myself. So I feel like this is a good time to be talking about this. You mentioned so many things, you just kind of went through the whole gamut of syndications and everything that you need to know. And you're right. It is a very knowledge heavy, and knowledge, you're rewarded for your knowledge. You help people make money. You help your tenants by providing good properties. But you are the one who really has knowledge based on the experience that you've had. So kind of take us, what are the first few steps that people need to know when they're thinking about doing a syndication, when they're thinking about, expanding past their own, cash abilities?
Yeah. For a lot of your listeners, they might have a W-2 job. And so the first thing I'll say is don't quit your W-2 job. And the second thing is I actually recommend that you have at least 1 to 2 single families, whether that's your primary residence or there's a rental property, doesn't really matter. And you should have some experience managing tenants. And I say that because being a prominent syndicator is almost like being a director or a senior manager in a corporate job. You can't really be that unless you have been at the boots in the ground of doing the day-to-day. So you know what it's like. So you never managed tenants before. It's not right to say that you can manage property management company who then manage the on-site, who then manage the tenants, because you don't actually know what it's like at the ground level. And so that's that. So don't jump into real estate syndication without prior background. So it is a, how do I put it? It is a sophisticated game. So yeah, it's not for everyone. The second one is it's helpful and almost required that you are accredited and you have quite a bit of net worth and you're financially literate and you're doing well. Most sponsors that I know, good sponsors, they're successful in their own right. They have either started their business, they have made it to director or senior manager level, and they went to a startup and made it big. So that's that. So that's sort of the prerequisites in terms of like, who are you? Then what I don't do is I don't send out emails to all my friends that, hey, I'm going to raise money in 6 months. Like, would you like to participate? I never ever did that. I didn't even have a MailChimp account of these marketing accounts until I have a deal. So then the next step is to do a small multifamily where you see that you can succeed. You can either do it with your own money or you can raise a very small portion. Our very, very first quote unquote syndication is a 7-unit in Tacoma, where it was only a $540,000 purchase price, $130,000 renovation. And
still 7 units in Tacoma at $540,000. That is a deal. I live in Tacoma now.
And 3 years ago. This is
okay.
4 years ago. A year and a half later, we sold it for $900K, right? Yep. So that was a 60% return after all fees. And we only raised like $200K, $250K. But that gave us the taste that, okay, we can do this. It's actually not that hard. So and we can get into, how do you talk to the broker? How do you get the deals and so on? But make sure you have the right ingredients before you jump into real estate syndication.
Cool. I love it. So I'm just going to quickly kind of recap what you just said. The first thing you said was don't quit your W-2. I like that because I did quit my W-2 and it was probably wasn't the smartest decision. And especially if you're trying to get a loan, having that W-2 behind you is a lot easier. I can say that from experience. So don't quit your W-2. That was your first little bit of advice there. And then you said you need to have experience managing. I love that you said that, man. I've told this story before on this podcast, but the first property that I bought, well, actually it was a couple of properties after that, because I did some flips, but then I bought a rental. It was a duplex, and it was a nightmare. Like, I had people, one person put, what is it? It was like basically like a concrete mixture in the sink and flooded the entire place. The other person just stopped paying, and it was just a nightmare. But it was something that I'm glad I went through, because that shows, you really don't understand property management until you have been a property manager. You understand the crazy shit that can happen. So I like that you said that you have to have a little bit of experience to know how to manage the property manager. And then I like that you said start small. That's really good advice. There are so many people out there just saying, go big, go first deal, do 200 doors, whatever it is. That can definitely lead to failure. Starting small is a good piece of advice. You started at 7 doors, you went on from there. So what about raising capital? Because that's usually the part that, or at least from my perspective, that can be the part that is the most difficult. Finding the deal isn't, well, some people have difficulties with that, but if you're good at marketing, that's not that hard. Right. And then, if you have experience managing, that isn't all that difficult, but raising capital can be a hurdle. So when it comes to raising capital, what is your advice there?
Good question. It goes back to who you are as a person. The journey that I went through may be very atypical. I work in high tech. My friends are all working at Facebook and Google, and just, all pre-IPO companies. I got lucky because the company I worked at lived when IPO. During the time I was doing my first large syndication, so people do have money. I was a good employee. Always did well at work, so people know that I can execute. So these are all the things, and they also know that I was interested in buying multifamily. So for about a year, I didn't have a deal, and so during that year, every time we got dinner, they will ask me, do you have a deal yet? Do you have a deal yet? If you have a deal, I want to invest. So it's not that I'm asking for money. They already preempted.
You are being hounded for money. That's a great position to be in.
So that's not a good lesson, in a way that, like, there's no strategy in a way. What I will say is the fear of raising money is real, and it's a catch-22. You need the money in order to look at a deal, and you need the deal to have to raise the money. But I want the listener to probably flip that around. Of, if you are really, really good, that these lessons are so invaluable that everyone wants a piece of your knowledge and mind to invest their money. They don't have the time, they don't have the knowledge to do what you want to do, right? So take pride in that craft. Focus on the craft and not focus on, oh, how do I convince this person to invest with me? Because when you're so good, and when the deal is so good, any reasonable investor and other sponsors, when they saw the deal is so good, they will become your co-sponsors. They will even invest in yours themselves. When they saw that you're high integrity, they will make it work. You just give a little bit more shares away. Sure, that's fine. You have a couple more co-sponsors. When the deal is very good, raising money is never a question. I know it's hard to believe, but you kind of have to switch the ordering. Find a deal, find a really, really good deal, and know, by looking at like 100 or 50 deals, know that this is one of the best I have looked at out of the 50. Then you just have confidence when you go into raising money. When you try to send out emails, like people send out monthly emails and say, hey, come talk to me, I might have a deal soon. You usually doesn't work because you spend too much time learning on how to market and not enough time on perfecting the product.
Yep. I love that. Not enough time perfecting the product. And it is good to see this as a product, because you're providing the people who are putting their money into your projects. You are their product. You are the person. They're trusting your experience. They're trusting your knowledge. They're trusting that you can get the returns that you say you're going to get. So I love that. Actually, I went to a wedding a while ago, and it was the first time that I kind of had the light bulb go on where other people wanted to put money into my projects, because I was just sitting at the table. I was just talking randomly about a self-storage that I was buying, and my uncle was just like, here's my card. Please call me when you have your next project. I want to put money into it. And I was like, really interesting. So my light bulb kind of went off. So the kind of on a tangent there, but it's very true that your experience is valuable. You have to value that. And if you're out there, you're listening, and you don't have experience yet, Perry Zheng gave a great example earlier. Just start with house hacks. Get into a flip, buy it, live in it, fix it up, move on. That is going to give you great experience to get started. So Perry, I just checked the clock. We've kind of gone through our time, but before we move on to the quick question round, I do want to ask a little bit about Cashflow Portal. This is your new software. You're a CEO and founder. Tell us a little bit about what it does, what people can expect.
Yeah. So first is when I was doing my first deal, we raised about $4.3 million from 70 investors. So that means we send out 70 DocuSigns. They sign it, they send it back. We open the DocuSign, note down their investment amount, put it in a spreadsheet, countersign it, we send it back. Then we check the bank account every day to see who has wired the money. Then we will send them another email acknowledging the receipt of that wire. It's just too much paperwork. I am not getting into financial freedom to be doing admin stuff, right? So the software is to help automate those operations, and it gives the investors also this modern professional look that this is legit, right? It's not mom and pop transferring documents over email. The second thing, which I think the industry is moving towards that, is there are a lot of sponsors or want to be sponsors that want to create a website to track leads. And everyone is going into Facebook campaign, Google ads, and so on. And that's quite a bit of money and quite a bit of upfront cost. And you're actually spending more time marketing and not enough time doing asset management. So Cashflow Portal can think of it as the Airbnb or the IMDb of real estate syndication. Go on there, you can see other sponsors. And if you find their track record good and reputable and they seem honest, you can add yourself to their investor database and set up a call with them automatically. So Cashflow Portal helps you do the marketing within its ecosystem. Now that part is not yet 100% built out, and we're still in the progress, but it's looking really good. Right now, 100% of the profit comes from the first part, which is the real estate syndication software. It helps you streamline, and that business has been growing really, really fast.
Cool, man. I love it. So if you guys are out there, you want to do some syndications, check it out. www.cashflowportal.com. Sounds like something, who wants to do 73 DocuSigns to track all that stuff? That's just too much paperwork. Awesome. So Perry, we are into the quick question round. Are you ready?
Yes, I'm totally ready.
All right. Starting off, we always start with books. I'm a big bookie, so why don't you give me 2 book recommendations, one for general life wisdom and one for real estate specific.
For real estate, I do recommend Rich Dad Poor Dad. I was listening to Bigger Pockets podcast, and then I listened to the Rich Dad Poor Dad. Now, no, it is sensational. It's a little bit, the character of the author might be questionable, but it did the trick on convincing me that real estate is really cool. So, read the book. Don't dig too much into the background of the author. Let's put it that way. Yeah.
Yep, that's good advice. And I've said that multiple times here. So many people give that book as a recommendation, and it's a good one, especially if you don't have experience. It'll open your eyes. Just don't look into the author. It's a good book.
Moving on. For the non-real estate, I have a very interesting recommendation. I really like this book called How to Get Rich by Felice Dennis. Now, it is not a self-help book. It's more of a memoir by an actual entrepreneur who is a very successful entrepreneur. And it is almost a soul-searching, very honest interpretation of what an entrepreneur should be. I know about this book because I listen to a lot of SaaS podcasts, software as a service podcasts. And it's actually one of my favorite books when it comes to entrepreneurship.
Awesome. So which one was that again? You said How to Get Rich. What was the author?
How to Get Rich by Felice Dennis.
Felice Dennis. I have yet to read that one. It sounds like something right up my alley, so I will have to check that out. All right, we are moving on to the next question. This one is for your younger self. So if you could go to the Perry who, was still, you were still an engineer or still working in corporate, you didn't have any experience in real estate, go to him, look him in the eye, give him one piece of advice moving forward.
There are lots of advice, definitely. One is continue to improve on your craft. It's okay to be really good at your work. And that's okay. That's one advice. Just work hard and do well at work. It's actually do well at work helped me raise money from my previous coworkers and coworkers, right? Do well at work gives me the confidence that I can actually, if I given a task, I can execute. Do well at work means I may not be the best visionary, but I'm a good executor. I'm competent, right? And the second advice might be that corporate job actually does teach you a lot of things about how to manage people and how to just processes and KPIs and OKRs, those kind of things. And the second advice might be, which is contrary to the first advice I gave, is it's okay to quit. Quitting your W-2 job is not that scary. Now, I'm still not advocating you should quit your job just because you want to get rich in real estate. Don't do that. But once you made it, I had the opposite problem is the job, by definition, I'm making the highest amount of money I'll ever make in my corporate job because my career is going up. Every year, it becomes more difficult to quit. And I would tell myself, develop your skill set from a corporate job. But at some point, you do need to take the plunge. And now that I quit my W-2 job, it's very liberating. And I didn't know why I was struggling with it so hard about being so afraid to quit.
Awesome. I love that. So to kind of summarize that, you said, do a good job at your job, but don't dawdle. When it's time to quit the job, just do it, take the leap, and have faith that it's going to work out. That is it's great advice. All right, moving on. The next question is, so the United States, big place, many places to invest, which means there's a lot of places to put your hard-earned dollars. So if you could point to one area in the United States that is not your backyard, what area are you most excited to invest?
Good question. I really like Austin, Texas. I just visited Austin recently, and it felt like Seattle 5 years ago. It was the same feeling that when I saw Seattle after living in the Bay Area for a couple of years. I said, Seattle, 5 years later, you're going to become the Bay Area. People in Seattle 5 years ago said, it's so expensive. I'm like, you haven't seen the Bay Area. When I go to Austin, they're like, it's so expensive here. I'm like, you have not seen Seattle yet.
Interesting. Yeah. I've heard
that's for single families. I know there's no low cash flow. I know it don't really make much money. I know it's overhyped. Know all of that. But I do learn over the years that sometimes people who don't do much work, but they pick the right market, end up making way more than the people who try to negotiate the diamond. So, I know this is more of a gambling, so don't take that as advice. But I do see that Austin has the making of a good city, and people are moving there. The other place is just I personally like Dallas a lot, and I continue to be bullish on Dallas.
I just bought 2 self-storage in Dallas. I 100% agree. It is a great market.
Very cool. Mm-hmm. Yeah. So one is more cash flow, or median cash flow, and median appreciation, and Austin is just low cash flow, or negative cash flow, and then just high potential appreciation.
Cool. I love it. Yeah, you really do. Appreciation is just an amazing tool. I mean, one deal in Seattle, if you bought it 5 years ago, you'd make more money in that deal than, I don't know, 10, 20 deals that you did in Detroit. It's just, It's amazing. So appreciation is fantastic. And Austin and Dallas are great places to take some of that. So moving on, I lost my place. There we go. We all have strengths. You are no exception. Everybody has something that they are kick-ass at. So what is your Superman strength? What are you exceptional at?
I think I am good. I'll talk a little bit about my startup. I think the one thing I do better than other founders is that I can build a good engineering team. It's hard to build a good engineering team. The engineer have to respect you. They need to know that you actually understand what they're saying, and that you need to be empathetic, and you need to be action oriented and move things forward. So I do think I really admire intelligent people and educated folks, and I can put my vision into a plan that we execute day after day. So building a team, being a good manager, I think is something that not all entrepreneurs start with. Some people, especially the younger entrepreneur, they learn on the job. Now the older ones, they probably run out of stamina. So I think that might be my superpower. Is like I still have stamina, and I'm lucky enough to learn that skill set in my corporate job.
Perfect. I love it. All right. And that brings us to the very last question. And this one is for the listeners, because you've given us so much good advice. I'm sure people out there want to reach out and say hi, maybe get a little more information on Cashflow Portal. So what is the best way for people to reach out?
Yeah, great question. The best way is go to cashflowportal.com. You can email me at perry@cashflowportal.com. And then we also have, for all the customers and the users, we have a private Facebook group. It's called Techies in Real Estate. So come join us and check it out. And you can ask any questions about, marketing, what software to use, how do you manage your investors, how do you manage your rental properties. We are there to help.
All right. So that was cashflowportal.com and also the Facebook group Techies in Real Estate.
Yes.
So if anybody out there wants to reach out to Perry, I will put that in the show notes. Just click the little more in the description. It'll pop down the full description in there. You can find those links. Awesome. Well, Perry, that concludes it. So thank you very much for hopping on and sharing your experience.
Thank you. Thank you for having me. Thanks for being super concise.
Absolutely. For everybody who's here with us today, thank you guys. You're the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the investors quick analysis calculator and offer tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesaler's Template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.